Our next keynote address with Fireside Chat explores how stablecoins can become the foundation of ASEAN's next generation financial infrastructure, transforming payments, settlements, liquidity, remittances, and digital commerce. Our speaker will also take a look at the opportunities, risks, and pathways to scaling stablecoins across ASEAN's digital economy. Please welcome the founder of Binance, Changpeng Zhao.
Okay. Now, thank you so much again, Secretary Henry, for that message from the President, of course, message from the Secretary himself in support of the FinTech industry in the Philippines. Now, ladies and gentlemen, please welcome in person his first public event in the Philippines, CZ. A round of applause for CZ. You know, when I had that post 2 days ago, I got a lot of messages saying, will he be in town? Will you be physically present? Or will you just be sending a recorded message? And so on and so forth. But thank you so much for gracing us with your presence this morning. And in fact, you know, I prepared some questions, and these questions are practically not how would I say it, pre-cleared with CZ, because what we want here in this summit is a no-holds-barred discussion. We want to avoid the safe questions and the safe answers. We want to really get into the bottom of things, because at the end of the day, financial inclusion or digital finance is all about transparency. It's about accountability. It's about, you know, having to have the trust within and amongst players in the industry. Now, my first question to you, CZ, maybe you could first greet our audience first.
Well, first of all, thanks for having me here, and it's an honor to come here, and it's my pleasure as well. I've visited Philippines a few times, but never made a public appearance, so it's actually an honor to be able to speak to this audience. And yeah, I'm just happy to be here. I also want to let everyone know that Binance Philippines is actually launching their fiat services today or tomorrow, right? Yeah, so very soon. So, and also Binance Philippines have got a license in the Philippines, in the sandbox, and that's a huge amount of work, thanks to yourselves and all of our partners that helps us. So I think this actually puts Philippines in a very, very strong position. So I'm just really happy to be here. Thank you. Yeah.
Thank you so much. A round of applause again for CZ. Now, I have some questions for CZ. As I've said, this is, again, a no-holds-barred discussion. Now, CZ, you've said, I would like to focus first on the ASEAN as a whole. Now, you've said that stablecoins could grow a couple of 1,000 times from here. So if that growth concentrates in emerging markets like ASEAN rather than the US or Europe, so question now is, what does that actually look like on the ground, say in Manila, in a sari-sari store, or we call it, you know, sari-sari store, or mom-and-pop store, or warung in Indonesia, or even Jakarta remittance corridor 5 years from now?
I think it's just going to see more high efficiency transactions. The cost will be lower, speed will be faster, the confirmations will be faster, it will clear faster. And also, especially Philippines is a very big remittance corridor. So I think, the remittance costs today are just astronomical. They're just insane. So we can, using the blockchain technology, we can bring that cost down significantly and the speed faster. So, and because we're able to do that, I think, well, number one, the people is going to become more richer, and also we can do more business more quickly. So I think it's going to improve every aspect of our financial lives.
Yeah, because Philippines alone, we're the third largest in the world in terms of inward remittance volume. Last year alone, we were able to register around $35 billion in inward, in inflows from our overseas Filipino workers. And I think, to your point, this is something that would really help our Filipinos overseas, of course, and their families back home. Now, another question for you now is on sovereignty and control. I think this is also a quite sensitive topic. You're advising multiple governments right now on national stablecoins and tokenized markets. So when a country like Philippines builds its own rail instead of adopting a dollar-pegged stablecoin, what do they gain? And what do they quietly give up?
Okay, there's a few different questions there we can unpack. Well, first of all, when you mention the number, 35 billion in remittances, using stable coins and blockchain technologies, today, the Philippine population, if there's 35 billion being transacted, you're probably paying somewhere between $5 to $10 billion in fees, right? So we can probably reduce that to like almost zero in fees. So that's a huge amount of savings for the population. And then on the digital rails, there's two different points. One is whether privately owned stablecoins versus national owned, like does it take away sovereignty of the country, et cetera. I think today it's more important to have the entrepreneurs launch different, probably multiple different stablecoins so that you can test out how they work. Of course, we always welcome government-issued or state-backed stablecoins as well. That has more authority and more secure, et cetera. But I think different stablecoins are going to serve different purposes. One does not take away power of another. In a new emerging market, competition doesn't reduce because it's a virgin land, it's a virgin territory. Competition actually allows you to expand further, quicker. You can establish the market quicker. You can test different ways of products, et cetera. And then on the stablecoin itself, it's very important for there to be a good local stablecoin in every country. When we move the financial system from what we call the TradFi, traditional financial systems, to a digital financial system, you want your own local currency to be the dominant currency that's used by your population, and hopefully even populations beyond your borders. This increases your local economy. This increases your influence, control, et cetera. So
the emergence of a PHPX, a local backed currency.
It's absolutely necessary. It's not even, to me, it's not even an option. Philippines needs its own multiple local stablecoins, hopefully. But a PHPX is absolutely necessary. Otherwise, you're just giving up so much benefit. Well, you're giving up your economy or transactions to run on somebody else's currency, which is not something I would advise.
Yeah, because definitely, from your point, right now around 5 to 7% would be your service fee for remittances, right? So, and you're saying now that it could go down to zero.
Practically zero, yeah. I mean, to transact, it's practically zero, yeah. I think initially, from my perspective, I would recommend most stablecoin transactions to be basically zero fee. That's the best way to push this new technology. That's the best way to have adoption. And the cost is actually very negligible, like from an infrastructure cost perspective. Most blockchains, the stablecoin transactions, well, at least on the BNB chain, is basically zero.
Yeah, because I think one of the things that most Filipinos would normally ask, or even our regulators, would be on security, right? So making sure that, while the promise of it being zero fee or practically negligible service fee for transactions like cross-border transfers, then definitely that particular portion or input or imperative of it being safe and secure, is it something that this particular initiative or this particular platform would guarantee?
Yeah, okay, so this is actually a very important, insightful question. You want to be careful with completely free. If a business is completely free, it makes zero revenue, then there's a sustainability problem. So, and then you may become the product, right? So, but in today's world, you can offer certain services for free, but you can make money somewhere else, right? So when you can provide a large amount of value, but then you can capture only a small portion of it and still have a very sustainable business. So, for example, in the ecosystems that Binance is involved in, they make fees from the traders, right? So that's sufficient to sustain many other services for free. This is very similar to the internet, right? So many of the services that you use from Google are free. Even the clock on our phones are synced with the Google time clock, which is a free service. But they make enough money elsewhere on the search engine, on all the other, on advertising. So it's okay to provide many services for free. I think that's going to be the model for many new businesses to come. The technology costs today for running a financial system is dropping very significantly, especially using blockchain technologies. So there's so many different financial services that a blockchain can provide. I believe most of the basic transactions should be close to free.
Well, good thing. Segueing from that particular statement about the free regime or the freemium thing, we know that half of ASEAN's population is still underbanked or unbanked. And stablecoins need a smartphone, like connectivity and enough financial literacy to trust a digital wallet over cash under the mattress. So which of those three is actually the hardest barrier to solve? And are we underestimating it?
I think we're underestimating the difficulty by some extent. I think the technology, the smartphone, the connectivity is there. That's the simple part. The harder part is the financial education, it's the literacy. It's a bit of both. It's the education plus the ease of use of products. Today, to use the blockchain technologies, you have to deal with addresses, which are random strings that humans are not very good at dealing with. So we either need to make the product so much simpler, or we need to educate a lot more, and we need to do both. It's not just the product being simpler. It's also schools today do not teach you about financial literacy. So many people I made a post on X yesterday. Many people doesn't know what DCA means, like dollar cost averaging, right? It's a very tricky term. I don't know why they call it. It's kind of dumb. But many people don't know the simple terms like that. That's very essential for understanding financial investments, how to avoid scams, how to tell whether a product is good or not, or whether investment is good or not. So we don't really teach financial literacy in schools. At least not to the extent that we should, I think. So I think the education part need to improve quite a bit. But the education part is not just what the government needs to do. It's what every industry player, every person needs to do. So we need to collectively improve on that.
Yeah, I totally agree with you, because even amongst players in the industry, and of course together with our regulators, the BSP and the SEC, having to put premium so much on financial education or financial literacy has been the main agenda, even amongst competitors in the industry. If there is one thing that we are united in terms of having to ensure that all our customers, having to ensure that consumer protection is always the prime consideration. So I think that's why making sure that everything that this particular platform or this particular initiative would provide the Filipinos, definitely security is non-negotiable. Now, going back to our overseas Filipinos, because as you may know, CZ, Philippines, in terms of the value or the contribution of our overseas Filipinos into the Philippine economy, they contribute around 10% of the GDP of the country. Now, as I've said, they are sending approximately 35 billion last year. So much, but as I've said, much of it is practically eaten by fees, from 5 to 7%, and sometimes 10%. So if you were building the stablecoin rail for that specific corridor today, because you said that you will be launching today or tomorrow. So what would you refuse to compromise on? Would it be speed? Would it be cost? Or would it be custody?
I think all of those things are important, but I think the most important thing is probably cost first. We need to reduce the cost first, and that's the most tangible one. But speed is also much faster using blockchain technologies. If you use Binance Pay, if you do a transfer to your loved ones, to your family, it's instantaneous already. The fee is zero, so there's no fee on Binance Pay. And even if you do it on-chain using, say, your own custody wallet, like Trust Wallet or any other wallet, the fee is quite small, much smaller than what you pay to the remittances providers today. So, but I think the cost is the number one thing. It's the first one to reduce. But before that, there's also the security that's really important, right? So with anything with crypto, in Web3, you got to ensure security. Security is, like the blockchains are pretty secure themselves. It's the service providers that needs to be secure. And so I think after that, speed is already there. So it's already much faster there. So there's not a whole lot to be done there. And then ease of use is important, yeah.
Yes, I think another item, which actually I mentioned earlier in my welcome address, is definitely the emergence of agentic finance. No? So you've predicted, no? I've read in some of your articles, practically in some of your posts, you predicted AI agents transacting on-chain, as you said earlier, within months. Now, when an autonomous agent executes a bad trade or gets deceived by a scam, whose signature is on that transaction, legally and morally? The user, the developer, or the protocol?
Okay, this is a pretty tricky one. First of all, I'm not a lawyer, so I
think we have media people here. So.
And also, the laws vary by country, I think. And there's no right or wrong rules for this one. This is quite new. I think we got to explore that a bit. I think the responsibility is definitely shared between the developers of AI plus the user. I think as a user, you got to put in safety rails. You don't want to put like your life savings to an agent to control today. Like the technology is not that mature. You want to give a little money to transact on your behalf. So if it loses a little bit of money, that's the money you can handle. So that's your own responsibility. So I think every person should be responsible for their own actions. It is your choice to use an AI. AI developers also have a responsibility to make sure that the thing works as advertised. Today, we still see hallucinations. It's a new product, right? So it's easy to trick. Well, relatively easy to trick. It doesn't work 100% all the time. So there are this type of issues. But I think those issues will be worked out. There will be some losses here and there. Some people will get hurt here and there. But by and large, if you using any new technology, the best risk control is just sizing, right? You shouldn't put a lot of money to an agent that you couldn't afford to lose. So initially, you can give it a couple $100s to buy plane tickets, book hotels for you, to do some trades for you, but you want to control the sizing.
Yeah, I think good thing you mentioned that, because that is the problem right now. Because of the emergence of deepfakes, I mean, of course, AI being leveraged by scammers, by fraudsters. In fact, most of those scammers are 2 or 3 steps ahead of the industry, right? So, but the thing is, how do you now ensure that an ordinary consumer who does not even have any capability of determining what is true and what's not, right? So, because especially for Filipinos who are in far-flung areas, for example, or in rural areas, even for those who are in the urban areas, would have difficulty having to determine what is authentic and what's not, right? So, but what would you be? We call it in the Philippines budol. Budol is real, no? Budol is luring someone to get into something that is actually false, right? But the thing now is, I would like to ask you, what would be a practical tip for an ordinary consumer not to be scammed? I mean, how to detect deepfakes in terms of, for example, offers by scammers online?
Well, this is a pretty deep topic, actually, but I'll just touch a few high-level layers. I think first of all is really just common sense, right? So if something sounds too good to be true, it probably is, right? Like the most common one, the most outrageous one that most people recognize, like if you send me 1 Bitcoin, I'll send you back 10 Bitcoin, right? It doesn't happen, right? Just look, if you use common sense, that doesn't work. So I think common sense is number one. Educating yourself is really important. But there are more sophisticated scams now. So you gotta learn what's. If you wanna invest, there's more trickier ones. Like, look, for example, you invest in a project, buy that token, and the project goes down. That happens. So you don't want to bet all your money on one single project unless you're very, very, very sure and you know how to handle the worst case scenario. And also, speaking of worst case scenarios, I advise all investors to say, look, what's the worst case scenario? That's usually like when this thing goes to zero. What happens to my life, right? So you got to ask that question constantly. So that's very important. On the on this topic, there's many things that you yourself plus other platforms can do. Actually, AI actually could help in this area. You know, I know that Binance have used AI to say, look, if you send if you try to send crypto to a new, especially scam address, very often you will block it. Not 100%, but very often you will block it. I think even Trust Wallet have this feature where they scan the blockchain for illicit transactions, for bad addresses, and if you try to send to one of those, even if those addresses are not on any compliance sanction list, it may very often block you. Again, the technology is not 100%. As you said, it's like a cat and mouse game. The scammers want to outsmart the developers, and developers have to catch up. So it's not 100%, but it's getting there. Over the long term, I do think that the positive uses of AI will outweigh the negative uses. So as any technology evolves, the positive effects of it eventually will outrun the negatives. But we're early. So, and crypto is early, AI is early. So there are a lot of risks out there, but there's also a lot of positive forces out there.
I hope we can enjoin, you know, Binance Philippines or Binance PH to be an advocate of having to further promote financial consumer protection.
Absolutely,
and
yeah.
financial literacy, right? So
Absolutely.
I hope we can ensure that we are aligned when it comes to having to really promote further consumer protection. Now, this next question would be, in a way, pardon me for asking you this question because it's kind of difficult and sensitive. I told you that there's no such thing as, having to be here in the summit is something that we would want to really showcase to you. That this is, of course, again, having to disclose everything that we want answered. Right? Now, question here is, you've lived through the full range. Unregulated growth, a guilty plea, a pardon. Knowing what you know now, what's one thing regulators get right about crypto that founders in this room are too quick to dismiss?
Oh, okay, interesting question. Also pretty tricky to, I think what many founders, or at least I struggled with is, I used to view the regulators as like the blockers. They just block everything, they say no to everything, etc. But actually, the more I spend time with them now, I actually understand their job is pretty difficult to do. And they share the same goal as founders, really. Like we all want to protect our users, right? We want to protect the consumers. We do sit in different seats, whereas the founders typically want to solve this problem with technology, where the regulators typically have the tough job of satisfying everyone, right? So they want to protect the consumers. They have their political careers they may be chasing, and also they work in a much more status quo environment where any changes are difficult. For example, I just flew in from Hong Kong, and I was speaking with some of the guys in the SFC there, the SEC of Hong Kong, right? They said, look, the SEC rules of Hong Kong was written in 1974, and they've never changed a single word out of it afterwards. And all they do is interpretations of that document, right? So that's different, and people are very scared to interpret it in a new way, because if you interpret it in a new way, you get attacked. So the regulators actually have a pretty tough job of how to improve the regulations over time. So the industry players and the regulators need to work together. So this is a part, like as a tech entrepreneur like myself, I didn't understand even 5 years ago. I just thought, look, it's a new technology. There'll be some risks. We're doing everything we can to protect our users. And the technology will evolve at a very fast pace. But for regulators, it's actually pretty difficult. And then nowadays, I advise many governments, and I try to put myself in their shoes. It's actually a very difficult problem to solve. So there's no perfect solution, and there's also no perfect bad solution. It's just a constant small iterations that we got to push. And I think for the founders, my advice is, yes, we got to have a little bit of patience as well.
I think patience is a virtue. We know that. And of course, in your experience, I think that has been, showcased as well. Now, on the trust problem, so I think this is also one item that we would want to also showcase here. Now, Southeast Asia lost tens of billions to scam networks last year, and many of them crypto adjacent. Now, how do you separate the legitimate promise of stable coins from the reputational damage the scam economy has done to the entire category. Practically, that destroys the image or the integrity of that initiative, right?
Okay, again, there's a couple of different things here. I think number one is if you look at data, the percentage of illicit transactions in crypto is about 100 times smaller than in traditional finance. So I think only 0.014% of crypto transactions are associated with illicit transactions.
Sorry, can you repeat that? So
0.014% of crypto transactions.
Versus the traditional.
Traditional is about 2 to 5%.
Okay.
So in the traditional banking world, in what we call the fiat money world, 2 to 5% of transactions are associated with the illicit transactions. That's a huge number. And also the traditional finance is much bigger. So the 2 to 5% of that is like trillions of dollars. Whereas in crypto, the entire market is 2 trillion, and only 0.0014% of the 2 trillion is associated with illicit transactions. So that, number one, the numbers are very explicit. The numbers, there's much, much less illicit transactions in crypto. And there's a few reasons for it. Crypto is too transparent. It's very, very easy to trace crypto transactions. It's a permanent public record there. It's pseudo-anonymous, meaning that, well, it's kind of anonymous. But if you pair that with a large centralized exchange KYC, you can pretty much trace the entire blockchain, pretty much. So, and law enforcement increasingly know how to work with large crypto platforms. Binance even have a Binance even have a FIU training unit that trains law enforcement around the world on how to do how to analyze transactions properly. And that training is actually the most sought after training, at least when I was running Binance. I think today it still is. So, so the numbers actually are not often reported. These numbers are reported by third-party blockchain analytic tools, and that are used by law enforcement, et cetera. So the data speaks very clearly, but nobody talks about it. The media typically wants to do a narrative where, if any illicit transactions involve crypto, that becomes crypto's problem. Yeah. Whereas if any illicit transactions involve a bank or US dollars or like a fiat currency, that's not the bank's problem, or that's not the currency's problem. That's just some bad actors. So I think we've got to separate the bad actors from the currency or from the technology. Many people use this new technology for very good purposes, but there are some bad actors that do also use this tool. It doesn't mean the tool is bad. So we got to separate it. But overall, that's much less illicit transactions in crypto than in traditional finance.
I mean, just to further amplify your statement, I mean, really, the technology is not the evil, but it's actually the bad actors leveraging those technologies, right? So now, would like to jump into another interesting topic in terms of competition with the sovereign money, right? So if a national stablecoin and a private stablecoin are both technically superior, my question is, what actually decides which one a population trusts with their savings, the technology, the issuer, or something else entirely?
I think for most people, like what we say normal people, like they don't really care. They don't really care who issues it, or the technology, etc. They just want ease of use with low fees and speed, right? So, whereas if a national entity issues a stablecoin and that's very easy to use, that's low fees, people will adopt it very quickly. And like any of the businesses that I'm either a shareholder of or investor of, I would encourage them to adopt it very quickly. Private issuers typically require a little bit more to gain on the trust side. People say, okay, this is a new company. How much money is on their balance sheet? How long have they been around? So for companies, they take a while to build the trust. But they very often are able to offer much lower fees, much easier to use products. So I think if the national issued currency can match those properties, the national one usually will win. But usually national ones have a lot of restrictions, usually. So those restrictions typically hold back the usage of the product. So, but there's no reason why the national one couldn't be as good as a private issued one in terms of ease of use and low fees. So for most people, even for private private companies using stablecoins, we see that Tether's pretty big. It's a private company that's today not licensed anywhere. But because it has its size, people say, look, it's big enough that people use it. And it's been around for many years. So I think most people don't care too much about what's behind it. It's just they want low fees and ease of use.
Yeah. Now, we heard about DEFA, no? The Digital Economy Framework Agreement, which is actually the first of its kind in the region. Now, the ASEAN is trying to build, again, the interoperable digital rails across 10 different regulatory regimes at once. No? Of course, we are regulated by our respective regulatory bodies. So is that coordination problem solvable with technology, or does it require political will that technology can't substitute for?
I think that's mostly a political problem. The technology is very simple, and the technology is the same across different countries. And so that's much, to me, at least I'm a developer background, so for me it's much less of a technology problem. Whereas for countries to agree to use the same framework, it just takes political will. Everybody have their own little problems to solve. Some countries have FX controls. Some don't. Some have higher taxes, some have lower taxes. Some wants to attract entrepreneurs by offering incentives to attract businesses. Some don't. Some would just want to protect what they have already. Some are more conservative, some are more progressive. So just aligning all of those different interests, and that's not a technology problem. That's much more of a policy problem. And also different countries have different it's great when 10 countries collaborate, but sometimes there's also competition within those countries. They want to, those are friendly competitions. They all want to outdo they want to grow faster economies than the neighboring country, which is great. But no, there's some competition, internal positive, healthy competition too. But coming back to this problem though, it is a great initiative to have multiple countries join the same framework. It makes it so much easier for entrepreneurs, for business builders, and also just for retail guys to understand there's one framework that will apply to everywhere. And the rules doesn't have to be different across different countries. If you look at financial rules, they're pretty similar across different countries. If you look at security rules, even money rules, banking rules, all of these rules are very, very similar across different countries. There's not a whole lot of a need for every country to develop their own financial regulatory framework. They're very, very similar. And then I also highly encourage, when I advise governments, I highly encourage them to adopt regulatory passporting. If a company has a license in one location that's fairly reputable with a reputable regulator, they should allow passporting of that license in their country. There's no need to reinvent a lot of wheels here. But different countries have different levels of progressiveness or conservatism. So yeah, we're still early.
Good thing you mentioned about the regulatory passport, right? So in fact, we're also trying to push that initiative. I call that now, aside from it being a regulatory passport, my other term there would be license portability, right? So I think, to your point, say for example in ASEAN or even beyond the ASEAN region, you could see a lot of fintech players who are duly licensed by their respective regulatory bodies, who would want to say, enter the Philippines or enter any market in ASEAN, for example. Say, for example, Philippines, right? So we have quite a number of fintech players who are, who are owned by, private entities from overseas. But, to your point, if there is a mechanism of having to have a, regulatory passport, or what I call now as, license portability, that would now seamlessly, or at least harness and practically provide the impetus for, allowing more foreign investments into the country.
Absolutely, absolutely. I think for example, when you passport another jurisdiction's licenses, you actually automatically import all of the businesses that regulator has already approved. For example, like Binance is
Due diligence already, yeah.
yeah, and they also have done most of the work. You can still do your own due diligence. You can still request many information from the company. The passporting doesn't have to be 100% automatic. You can still request a process of application for that passporting, but it will be a much simpler application than a full application, brand new, right? And then so for example, Binance has about 22, 25 licenses in the globe. This is the most licensed exchange business platform for any business, including banks. Most banks don't have 25 licenses across the world. And then some of them, and many of them are very, very highly reputable, like ADGM, right? And if you passport that, also ADGM has many other licensees, other licensed platforms. And if you allow passporting of that, many of that business will be here right away. And then with that business competition is actually the best protection for consumers. Your consumers will get the lowest fees, the best service, the best liquidity, and the most secure platform too. So there's many advantages. It's just that it's politically a harder move for many politicians.
And not to mention the high compliance cost.
Yes,
right?
absolutely, yeah.
So just imagine if you are to have this, I hope, in fact, we'll raise this point to the government and to our regulatory bodies, given the fact that, especially now that we have the DEFA, the Digital Economy Framework Agreement, if we could push this forward insofar as having to adopt some sort of a regulatory passport or the license portability, definitely that would really propel the economy further for the influx of foreign investments.
Also on this point, it's also actually, at least in my naive view, it's also actually a little bit politically safe when you say we rely on another regulator for passporting too. So, and then you can share the rules. Then you can, so that the regulators can copy each other's homework and have a common framework. It's actually usually safer. Yeah.
And that's why I'm looking at our good friend Supnendo Humuhanti, who used to be the Chief FinTech Officer of MAS, who's been, that MAS has been the gold standard among regulatory bodies in the ASEAN region. So I think that's why, can we work on this with GFTN on having to push, regulatory passport, or what we call now the license portability? Do we get a yes from you, Mr. Supnendo Mohanty?
He's speaking next. So, and
you'll be speaking next.
And also, Sup has been, just to introduce him, anecdotally, he has been one of the strongest supporters for crypto and even for Binance, for all the crypto players from the MAS, even during our toughest times in Singapore. So he has always been a strong supporter.
Great. A round of applause for Supnendo. Yes. So normally he would always be invited by BSP, by SEC. So definitely, because we're getting global best practices, especially in policy frameworks. Now, my last question to you now is about your credibility and your honesty insofar as having to really push for the business, right? So one is, as you've said, that you're now an advisor inside the rooms where these rules get written. Does sitting on that side of the table change how you think crypto founders should engage with regulators going forward? And last question, follow-up question there is on the honest risk, right? If you're wrong, if stablecoins and tokenized finance don't scale the way you're predicting it, what's the most likely reason? That's one question. Not the optimistic case, but the actual failure mode you worry about.
Okay, so a few different questions there. I think the first one we kind of touched on. I think for any founder, it should approach regulators as openly as possible. But the problem is, in some countries, that's easy. In some countries, it's harder. In most large countries, the regulators are too busy. They have too many things going on. And the regulatory bodies are too large. It's pretty hard to get that for every founder to be able to talk to a regulator, especially many of the founders are running small startups. Once you get to a certain size, the regulators will talk to you. But for initial founders, that's a bit difficult. So there's a bit of a gap there. The communication channels not always fully open. But I think just be as transparent as possible and also be patient. I think patience is something I lack personally. But like my advice to other founders is like, no, if you touch any of the regulated businesses, you got to have some level of patience. But luckily, like for me or we're in this industry for a very long time. The industry, as hot as AI is, blockchain industry is not going to disappear. We're going to need money, and this is a new technology for money. So on the this ties back to the sort of prediction side. Like, what if we're wrong about stablecoins? Stablecoin is only one sector of blockchain, right? So if we may or may not need stablecoins if the central bank digital currencies are very easy to use, very easy to integrate. So there may be different variations of stablecoins. Or we just say, look, all this whole digital finance goes away. We stay with banks. Well, we stay with current state of banks. We don't use blockchain. Like, that would be the worst case. That just means that we stay where we are. We're probably paying 5 to 10 billion on that 35 billion transaction that people are facilitating. And if you have, actually many people in Philippines have done, like because of the cross-border remittances, if you've done international transfers, it's slow, it's very difficult, right? Especially for large amounts. So then we'll have to live with that status quo. I think that's a very small chance though. Innovation continues to happen. And AI demands much faster payments, much higher throughput payments too. So I think the innovation will continue. I think the risk is quite low from an entire industry perspective. The industry will move forward. From an individual project perspective, there could be different risks on different platforms. We've seen like 2 or 3 centralized exchanges shutting down in the last week, right? And we're like, I hope, at the bottom of a crypto winter now. So individual businesses, individual platforms, individual
projects. Over the crypto winter now?
I hope so. Nobody knows, right? So I really hope so. So from an individual project, company, token perspective, there could be a lot of different risks. Even in individual stable coins in different countries, there could be different risks. But I do think that every country must have their own stable coin. And that powers, that facilitates the local economic digital finance activity.
Yeah. Well, again, thank you so much for being so candid and being in the hot seat for today. I hope you didn't regret being here or answering those questions, those difficult and hard questions. But definitely, a lot of Filipino practitioners here in the fintech space have been looking for answers, in terms of having to ensure that the business or this particular platform or this technology, as you've said, that what we are advocating has always been technology for good, and having to eradicate or at least minimize the presence of the bad actors, right? So again, collectively, that's the whole idea of us being together here to make sure that we are united in terms of having to really push for consumer protection. And again, thank you, CZ, and for that insightful discussion. A round of applause again.
Thank you so much.
Thank
you. Yeah.
Thank you, CZ and Lito Villanueva, for that insightful discussion. May we now invite the other members of FinTech Alliance PH Board of Trustees on stage to present a token of appreciation. Thank you once again, CZ and trustees of FinTech Alliance PH.